Hello, Culture Matters podcast. This is going to be big. Before I introduce you to our guest, here is a quote I picked just for this episode. Listen carefully. The Federal Reserve is committed to fulfilling our statutory mandate of stable prices and maximum employment. Jerome Powell, the man, the myth himself. And today, dear opponent, a good friend of the Culture Matters podcast. You know him if you listen. If you don't, I apologize. Our good friend, Bill Mervin, the mortgage master. Every day he helps people achieve their dream in this great culture that we have. He's an advisor, a strategist when it comes to wealth building in and around the rights to bear arms and property. Good friend of the Culture Matters podcast, going to talk about Jerome Powell, among other things. Thanks for coming back.
Wow, that's thanks for the lead in, Jay. And you know how to get it started off right. Jerome Powell, he's a good friend of mine right now.
Yeah, I'm really curious what you think, genuinely. This quote, let me just make sure I'm clear, because I want to make sure I state the facts as stated.
Yeah.
The Federal Reserve is committed to fulfilling our statutory mandate of stable prices and maximum employment. First thing that comes up.
Wow, stable prices and maximum employment. So, I feel like that's let me think of a good analogy. Stable prices and maximum employment. That's kind of like trying to build something, I don't know, like a builder trying to build a luxury home and trying to build it cheap. Those are like they're just contrary to one another, right? The very things that potentially could keep inflation down and keeping prices stable. Also, oftentimes, has the opposite effect on on employment. They're just contrary to one another at times, and it's frankly, I'm a cynic when it comes to the Fed in general. So probably why you brought this to me. But yeah, first of all, frankly, I just don't think that the Fed really is necessary, and I don't think that I don't think that they have done a good job at either of those things. And yeah, I think that the markets should set the price of interest rates, and that the markets should be the one that dictates employment. So let's start there.
I'm curious about the energy, the feeling of those that are buying homes now, because as of this recording, as a mortgage advisor, expert, professional, you're working. You and your team, you're adding value. You're helping people achieve their personal life goals. It's actually happening, and successfully. There's been and there's some train of thought that it's really, 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 really bad out there. So what's the psychology of a buyer right now? What are they excited about? What uncertainties lie to, but what are they excited about?
I think that what are they excited about? I think the people that are excited right now about this housing market are few and far between. I think that the folks that are predominantly now I'm more optimistic personally, and we can get into that, but with what I see in terms of now being a decent buying opportunity, but there's very few people buying primary residence that are excited about the housing market. So I think that the people that are excited are ultimately excited to own a home, and they need a home, and so therefore they're making do with the cards that they're dealt. But I think generally there's a lot of fear and anxiety, a lot of uncertainty. I think that there's a lot of misinformation or misreading of certain data points. Personally, time will tell if I'm right or not. And so I don't see a lot of excitement. I think that, if anything, our job is to help kind of peel back the curtain, if you will, and kind of look deeper than, Yahoo Finance or whatever, and look at the numbers, unemotionally. But no, I mean, there's a lot of, I think, I'd say over the last 12 months, we've turned into psychologists as much as anything else, right? And dealing with this anxiety and this, just folks, nervous that they're making the right decision, right? And so, that's really been a big part of it. So, right now, you've got home prices up, you've got interest rates up, and it's really biting into affordability. And a lot of the purchases that are going on are purchases of necessity.
What's a motivating factor that creates necessity?
Housing formation, people getting married, people having children, people, I'm going to say it, people wanting to get the heck out of Philly,
Really?
big cities in general.
Big cities, people leaving.
Yeah. Lots of them. Yeah.
Lots.
Yeah. I would say, yeah. Mm-hmm. Now, I mean,
That's
the people in Philly who, see these $600,000-700,000 houses going up in some of these, really tough neighborhoods, frankly, I mean, see otherwise, I'm not sure who's buying them, but, we see more of a one-way ticket out as opposed to anybody migrating in personally.
What are some of the things that attract people to a community in your view?
Well, I mean, outside of, and the game has changed quite a bit with, employment, right? Because I mean, obviously there's a big fight going on to see exactly how much of this, hybrid work is going to hold. And I see a lot of pushback, see a lot of big names that are starting to come out and just say, I think somebody outright came out and said that, remote workers are less productive on the whole. I forget who it was, a respected business CEO recently. I mean, you see the big banks, Amazon, you see the big banks, everybody's pushing to get people back to the office. I have 2 remote workers, and those 2, I feel very confident in the work that they do outside of the office. But I think there's just a culture, an atmosphere. There's training becomes so much more difficult. So anyway, I digress. But I think that I think that the workforce has changed post COVID, and I don't think it'll ever quite go back to where it was. And I think remote/hybrid work will always be a bigger segment than it was pre-2020. But I think the jury's still out on how much of it sticks. But so generally, I think the first thing would be, work, right? They want to be able to live in a place where, of course, they can that they can have good employment. But after that, I would say safety. And so people want to be somewhere where they don't feel like they're going to get mugged walking down the street or have their house broken into, and all of the things that come with that. So so I'd say financial safety, and I think that people want to have I mean, it can vary so much from person to person. I mean, personally for me, I want to be able to, I want to have access and be close. And so I would say that there's plenty of people in this camp, right? You want to, some people just want to be out in the middle of nowhere. And if they can do that and they can pay their bills, that's what they want. But I think most folks want to have access to some of the amenities that come with big cities, or some of the things that you from time to time, want to want to have access to, but they want to be able to get in and get out, and and still have some space, and still have some peace of mind where they're living.
You're doing very well in this time. If we were to compare you to others in your profession, what's so special about you?
Well, that's a good question, Jay.
I feel like Charlie Rose right now.
Yeah, like it's like in a way it's a lob ball, but you don't, obviously it feels better coming from other folks. But I would say that I can kind of
I'm
lean into
watching too much soft. I think it's called the soft white underbelly.
the soft white
You got to go on
underbelly.
YouTube and watch those reviews.
I
God,
saw
it's one
that.
of my favorite things to watch.
Yeah, they've got some
Today on Soft White Underbelly, we have
yeah, they've
the
got some
Mervin
good ones.
Mortgage Professional.
But no, I mean, what do we do different? I think first and foremost, I would say that it's our overall, it's the approach that I like to take with mortgages and treating it. And we've talked about this in previous podcasts. I model my I take my business model after the financial advisory model. I consider ourselves a mortgage planning practice, and so it starts and while we work with everybody, starting with first-time home buyers, being an investor myself, I really get excited working with folks who have an interest in using real estate as a wealth accumulation tool. And so we really want to start by looking at a person holistically. We don't want to look at anything like a transaction. And so that means not just, and so even let's not even get into investors trying to build a real estate portfolio. I mean, there's things today with the market, with where it's at, with interest rates and otherwise, that that the mortgages that people are taking out today are not going to be the best mortgages for them in 2 or 3 years, right? And so we don't want to just do a good job of follow-up after closing to be there when that person is deciding to make their next move in real estate. We want to be an integral part in helping them create that vision and realize that vision.
Wow.
And then, of course, we're going to be the ones to be there to do that, because we were by their side, kind of helping them get there, right? So, whether that's making decisions about how we close on their mortgage today, keeping in mind what the market's likely to do in the future, or what our best projections of what it's to do in the future, so that we're setting up from the very time they close, and putting them in a plan in place to make sure, first of all, that they are always in the best position for that particular piece of real estate. And for those that have aspirations, like I say, to, either move into a bigger home in the future, whether it's to turn that first property into an investment property, and keep it in their portfolio and grow into other properties, whether it's folks that have a vision for having a shore home or a mountain home or a second home, and helping them realize that dream. So that's the types of conversations that we're having from the very first phone call. We do post-closing calls with all of our clients. During that first year, we have a 3 and 6 month check-in, and then we do annual financial reviews. And we'll do them more frequently if a person has a particular scenario that requires, check-ins at a more regular basis. And then we have what I call mortgages under management. In the same way that you have assets under management, is that we're identifying what sort of either market-based events might make sense for there to be potential changes in their mortgage, or it could be individual, personal events in that person's life that might make that the case. And so we are going to constantly be monitoring and watching the market, and then proactively reaching out to those individuals to make sure that they're not having to make decisions based on what they're seeing online or what ads are being served up to them. But they know that they've got somebody in their corner that's watching the market and familiar with their particular file, and always making the same decisions, helping them make the same decisions that we would be making if we were in their shoes. So I think it's that approach, and I'm sorry, so I think it's that approach first and foremost. And then I think the second real big differential is our team model, right? And I hate, I'll say it. I mean, we've been running this team model now for 7 or 8 years, and team is a big buzzword that's goes around in our business. But 9 times out of 10, team is a loan officer who maybe does enough business that the company gives them a loan officer assistant or a dedicated processor. And that's great. I get it. You want to create an image. But we really, so I have myself, I've got 2, we'll call them loan partners, but they have different roles. And those individuals, Mike and Angela, they are loan officers in their own right. They could be successful loan officers, just as successful as most of the people out there these days, completely on their own. So I've got one person dedicated exclusively to constantly working our files and making sure all of our pre-approvals are tight and making sure that we can execute exactly as planned every single time, and having somebody be able to do that full time so that I can be having consultations and I can really be in my highest and best use, which is talking to people about making smart decisions about their financing. Angelo he really can stand in for me and have all the same discussions and conversations that I could have. So it allows me to have a bit of a life if I'm away or things like that, and have our clients not miss a beat. And then he also is actively engaged with our interfacing with our partners, our referral partners, so that we're not just one of these folks, standing there with our hands out saying, hey, send me the business, I'll do a great job on your loans. But that I like to say, we have linked arms rather than outstretched hands, and that we're working together to find more people to help. And so that allows us to we have this great app, which our phone number, comes into all of us. We've got an app that has all of our texts to our phone number come into all 3 of us. So when we say that we've got, basically 24/7 coverage, we can back that up because we can split the load between the 3 of us. And then I've got a junior processor that we do an upfront underwrite on all of our files, so that we're not just issuing a pre-approval, but we're getting essentially a full approval on all of our clients up front, which A, gives them greater peace of mind when they're out shopping, and B, makes them much more competitive in this challenging market. It's about as close to a cash offer as you're going to get when you're fully underwritten up front. And then I've got another young gentleman who is really our database specialist. So when we tell somebody that they send us a client, one of my rules of thumb is I never say no. We'll at worst, we'll say not now, and we'll make sure that we're putting them on a path to home ownership. So when we tell somebody, we give them some action steps to get in a position to buy, and we tell them that we're going to call them on April 10th of 2024 to check in with them, we're going to call on April 10th, 2024, 100% of the time.
Really?
And then he's also active in our closed database, scheduling those annual reviews, scheduling those check-ins. And so by splitting the load up that way and truly running an actual team model, I just think it gives us horsepower that very few can match, if I could say.
How did you learn all this?
How did I learn it all? I learned it all through surrounding myself by really great individuals in the mortgage business and other great business leaders, by investing in myself and my team heavily in terms of coaching, and in terms of, just constantly investing in myself. I invested in myself and my team way ahead of my production, and had faith that if I did so, that the production would follow. And then just living and sleeping and eating and breathing mortgages for a long time, and having a real passion for it, and then taking what I saw other folks. There was a time where in the beginning I would take what I was seeing other folks doing and then just try to replicate it exactly, but I needed to make it my own. And so just never being afraid to break something in an effort to make it better.
Where do you think that fear comes from?
Which fear? The fear of breaking something?
Yeah.
Well, I've never really had it, so that could be a detriment at times. But I think for a lot of folks, where would that fear come from? I think that I don't know. I just think some people are afraid that once I think it's a natural feeling for many, once they start achieving some level of success, to want to hold on to it. And I'm a big believer that you're never standing still. You're either moving forward or backward. And so, if you're not constantly evolving, you're not constantly trying to improve and to try to get better and to try to up level yourself, then eventually you get stagnant and the market will pass you by. And so I'd rather mess up than let that happen personally. But I don't know. I think it's just a fear of letting things slip through your fingers and making a mistake and not recovering from it. I don't know.
Is this a time that you would say you would have been open-minded to jumping into the industry for the first time?
Would I be open-minded to jumping into the industry for the first time? I think that, that's a loaded question. Because if I was looking to jump into something, Jay, I just jump in. That's just always, I don't know where that came from, but that's just always been me. And I do think that there is potentially an advantage. I'm not saying that every single person, because there are, I've always been a believer, right, that like in anything, there is a certain skill set, there is a certain natural aptitude that you have to have in certain fields that have, that can be more specialized. And so not everybody's going to have that, and you won't know whether you have it or not until you're in it. And so therefore, I'm not saying that there aren't folks that would jump into the industry right now and they may fail, because it is very tough. I can't sugarcoat that. As much as I'm a glass half full and an optimist, and I could find all sorts of positives about this market for the midterm and the long term, for those that play their cards right, it's tough. But so some will fail, but I think that the person with the right attitude, and at least that baseline aptitude, surrounded by the right people, key feature there, base level aptitude, surrounded by the right people that just have that burning desire inside them to succeed at something. I think that this market does create opportunity. Because those people aren't encumbered by what the market was like 2 or 3 years ago or 4 years ago. They're not hiding under their desks, woe is me. If you just come in with a fire in your belly for something, and just do the activities that are known to give results over time, and you do it with reckless abandon, I believe that you'll get results. And don't have a lot of overhead if you're getting into the business right now. That would be a good thing, and to not have the pressure
It's an advantage to sleep on someone's couch right now.
It would be great. Yeah, man. If I was 22 or 23 years old right now and I was sleeping on somebody's couch and I was saying, I'm not going to be a doctor. I'm not going to be a lawyer. I'm not going to be an Instagram influencer. What's my fastest way to really having a very good life and changing the trajectory for myself and my future generations. I think you could come in and do some damage right now because the market it's thinning out, the herd's thinning.
Really?
And yeah. I don't know if I saw a number. I don't know whether it was left the business or became inactive, but something like 100,000 loan officers, like big numbers. I mean, and real estate's having the same thing right now, big numbers.
You think
So the
that
pie is smaller, but
Hmm.
the people eating at that pie is also shrinking.
Do the powers that be want less people in the business?
I think the powers that be don't have any clue what they're doing, but I think that the market wants and needs less people in the business. I think that.
Why?
Because I think that the business was doing so well for a number of years that it attracted a lot of individuals that, in my personal opinion, didn't belong here. I think the business has always attracted that, and that was exacerbated with the boom. And I think there's a lot of bad actors in our business, either people who have short-term thinking and are just motivated by financial their own financial motivations, or individuals who, quite frankly, who just do not have the skill sets to really do right by clients. And I'm on the front lines of seeing what kind of an impact that can have on people's lives. And I think that you need to. I think the mortgage business is better off when those people are out of it. If I can be a bit callous at the moment.
Well, what kind of negative impact can poor professionalism have on a consumer?
Oh, I've got a deal right now with a real estate agent who was doing a deal with their brother, and they're a week before closing, and now a week before closing, they're trying to figure out a way around something that should have been found out 2 months ago, right? Issues with bank statement sourcing and things like that. In a worst case scenario, that individual could lose their deposit.
Wow, a
In the best case,
deposit
they lose their deposit
is a lot
money.
of money.
They wouldn't have been interested in buying that property if they didn't have a motivation to live there. So even if they don't lose the money, they just lose the contract. Right now, they spent in this market. How many houses do you got to go see to get a house under contract? Right, a lot. Sometimes. I've been trekking around. I've been trekking myself around. I've been trekking real estate around. I'm getting that emotional up and down. I'm making offers on properties. Oh, is this the one for us? Oh, we lost another one, honey. Right. And you're out there, and then you get something under contract. You pay for an appraisal. You pay for a home inspection. Maybe you start packing your home up in boxes. I mean, this is a bit dramatic, but I've had it where you got your kid registered in school, right? And then you find out that somebody was so focused on the commission and just getting the deal moving forward, or just didn't have the knowledge or the skill set to properly vet that file, and now you're scrambling. I've had people who were buying homes, and we got our loan clear to close, and the person that was buying their home, all of a sudden their lender messed something up. Maybe somebody pushed a button and thought they were going to get a mortgage, and now all of a sudden the person that was sitting in a cube in Ohio, you find out that they didn't know what they were doing. And and now I've had to have my folks tap out their 401k and create a taxable event to settle on the new property, because that's the lucky one who has another means to settle. I mean, I've seen it all. And then those are the kind of more extreme examples, but the deals that still go through, but it gets delayed, and then you got moving trucks that you got to reschedule, and you got rate locks that got to be extended, and you think you're going to close on a Friday, and Thursday you're going back to the bank to chase around new things, and your stomach's in knots, or you're calling out of work, right? I mean, those are all the kind of smaller things that ultimately may still get resolved, but that and then I would argue that those are the things that can just go wrong, right? But we don't just do the advisory business model that I talked about previously just because we think it's a good value proposition and a distinction versus our competitors. We do it because I believe in my heart of hearts that that's what clients need out of a mortgage professional. I believe that a mortgage professional, perhaps I'm biased here, but I believe that a mortgage professional, when done right, is the same as having a good attorney. It's the same as having a good financial advisor. It's the same as having a good CPA, fill in the blank of your kind of professional network. And so even when you don't have problems closing the loan, when a person just treats it like a transaction and just gets you to the table on time, I truly believe that you're missing out on one of the biggest values that a good mortgage originator advisor can bring, which is starting with the end in mind with this transaction, having the helping, or how about the people that call somebody and they get a rate quote with no other context and no detail and decide now's not a great time to buy a home, and nobody has the skills and the knowledge and the information and the acumen to be able to take down those walls and those fears and help that person get rid of the emotion and make a smart decision. What about those folks? I mean, the list could go on and on, actually.
Wow. Is it true that the home is where most people build their wealth over time?
Yeah, and I know that there's some folks out there that would disagree with me on this. Certainly Gary V and probably our 10X buddy over there. And there's some folks out there that think that that's a bad idea, but the reality.
What, the Scientologist and the recent divorcee?
Yes, him. You know who I'm talking about, Jay. How did you?
Aren't they selling something? No, I guess
I think that
it could be
they
said the same for you, right? Because you do mortgages.
Yes, exactly.
In fairness,
that's fair to say. But here's the reality. The reality is, and I don't know if this number has been updated in the last 2 or 3 years, but the reality is that the net worth of a homeowner is about 40 times greater than the net worth of a renter. Right. And you could
40 times.
40x. Yeah. You could attribute that to other factors, right? That the individuals who are in a position to buy a home have other resources. But the fact is that, in a time where we no longer have defined benefits, retirement plans. I mean, they're pretty much, unless you work for the government, generally speaking, those are no longer, inflation raging the way it is. We can come back to that one. But, the fact is that the majority of individuals, home ownership and owning of real estate is the fastest and easiest way for them to grow wealth. And so, yes.
What are some of the ways to undermine someone's life buying a home?
Undermine?
Yeah, some of the cons.
Some of the cons of buying a home. Yeah, I mean, I guess I could think of some, which would be, I guess it would just be perhaps overextending. I would say, overextending yourself, not anticipating some of the ancillary costs of owning a home, whether it's maintenance. I mean, you should be able to think through the utilities, I would hope, but ongoing maintenance. I would say that, if I would say that somebody who has a shorter time frame or is in a position in life or with their work that may cause them to need to move, and somebody who's not able or willing or desirous of turning that property into a rental property, because when you do add up the transaction costs, I would argue for somebody that's going to move around, that is not going to keep that real estate as a rental, you should know, right? You should, you gotta, I would be taking a stab at this number, but you got to have, a 3-5+ year time horizon, because even with a good real estate market, when you add up the transaction costs, you're not really going to see, it's almost like a whole life policy, right? Like, in those early years, right, you're just kind of getting that death benefit, fired up. Once that's kind of really kicking and the dividends start to kick in, it really compounds. But if all you're going to do is, if you're going to get a big whole life policy and you're not going to be able to continue the premium payments after year 3 or year 4, then just go out and get term, right? I think that's somewhat analogous to real estate, right? Which is when you add up the transaction costs, if you're going to, if up front, or if you're in a position in life with your job or something else that would kind of have you moving around a lot, and but again, you could combat that by, turning that property into a rental property. But that's that, not having a long enough time horizon. And then I think, while it's sometimes necessary in this market, I am a little concerned for first-time buyers who are waiving home inspections. A sophisticated investor, or somebody who has owned homes and are selling one property to buy another one, or tapping out equity of one property to buy another one, and they're playing with the house's money, so to speak, with their existing property. You could afford to miss some stuff on home inspection and have some delayed maintenance or some bigger repairs that you could absorb, because you've done so well on your other real estate. But I'm not a huge fan of first-time buyers waiving home inspections, because that could be the other big thing, is that you miss something, and if you're kind of scraping to get into a home, and you got a big roof or a heater, or you've got some other item that pops up before you have the reserves to deal with something like that, that could be problematic. I think those would be the biggest downfalls, outside of just and there's not a whole lot of these, but just buying it in, there's so few areas. Real estate, even in this bull market that we've been in, at least I'm talking regionally right now, because I think that's where a lot of the misinformation about real estate comes right now, is when you look at these national numbers, right? And yes, there's places in the big cities, certain big cities, and there's certain coastal areas in California, Austin, Texas, Denver, where the real estate is seeing a pullback. But I'm going to talk, mostly about, Philly Metro right now, Jersey, our market, and as a whole, it's doing incredibly well. But in any market, no matter how well it's doing, you're going to have certain pockets in certain areas that, for one reason or another, might be trending the wrong way. And so, I think it's just working with good professionals that'll help you avoid those situations.
How do you stay motivated?
How do I stay motivated? Outside of having 5 children, I don't know, man. I think it's just always, it's in my DNA. So I don't know. I have a lot to add on this. I mean, I can tell you that from the first day I was introduced to real estate and mortgages, I had a passion for it. I think that, I don't know, I've heard I think Steve Jobs, I mean, there's so many folks that have talked about it, right? But like, finding something that really, just really fires you up, right? And here I am, a little over 20 years into real estate, about 18 years into mortgages, and even in tough markets, even there's times where I want to pull, whatever hair I have out, and the fact is that I love it. I love the challenge. I love solving problems for people. I love the conversations that I have with folks that I helped 5 or 6 years ago, and seeing the impact that it's had on their lives.
Wow.
And that does it for me, man. That does it for me. So, you know, you got to do something in life, and you know, this is it for me. So I think it's finding that, whatever that it is for you, and just leaning into it.